Hello, ladies and gentlemen, and welcome to another edition of the podcast with me, Russell, and
me, Chris Pollock. Hello, welcome.
Hello, Chris. How are you today?
Yeah, good. Not slept brilliantly, so going to trade fairly casually today, if at all.
Okay, fair enough.
So yeah, you got to pick your moments to strike when you're not at your sharpest. Don't bet the farm. In fact, never bet the farm, of course.
Never bet the farm.
Yeah.
Why, do you own a farm?
No, not yet. Maybe one day. I can see myself in retirement.
Well, yeah. I mean, as long as you don't mind paying the extra inheritance tax.
Well, that's the reason maybe why not to anymore. That was the reason to own one in the first place.
Exactly, but unfortunately, the government has taken that away from the poor farmers.
It'll just have to be a family office.
Because obviously they haven't been through enough, you know?
Indeed. Yeah, it's tough work.
Anyway, so I've been out of touch with the markets this week, being a bit busy, so you probably have to do most of the talking this week. Well, I mean, let's be fair, you do most of the talking every week.
Can't shut me up.
So how's things been? It's been a bit of a hectic weekend, right, with Trump and stuff.
There's only one thing to talk about, isn't there? And it's Donald Trump and his the wedge he's dividing in the NATO alliance, getting rid of all this lovely relationship we've had post Second World War seems to be slowly falling down the toilet. So yeah, obviously this is all in the pretense of Greenland being a strategic asset for the US and in wanting to make sure that Russia don't send submarines under the ice and attack via also Canada. It's a long way to go from Greenland still, but to get to Washington, he's obviously nervous of this and he wants to make sure that it's well defended. He believes it isn't. Maybe he's right. And yeah, so his solution is to take it.
Yeah. Well, I mean, he did say there were Russian vessels in that sea, but the people of Greenland have said we've never seen one, so I don't know what you're talking about.
Well, maybe they probably, you would argue, probably got the best intelligence going, so maybe they do know something, or maybe it's part of the negotiation, who knows. But anyway, this led to some pretty stark news over the weekend. We had announcements of 10% increases on tariffs announced, which led to a big gap lower on Monday. This is obviously on the back of an option expiry. We talked about the potential turns in markets last week anyway, and the catalyst ended up being, on this occasion, these tariffs. I mean, it was going to go down regardless of option expiry when you do tariffs, right? So as we saw back in April of last year, and lo and behold, we got whacked in the markets again. Should we have a look at the charts?
Yeah, I think that's a good call. That's a good call. Oh, what's that?
How did that go there? We'll talk about that in a minute. This is the gap from Friday's close. We're already easing off in the Friday session. We had a bit of a washout straight after the open. In fact, on the option expiry, it did manage to cling on, but bled out towards the end of the day, and then bang, gap open on the Sunday night futures at 11 o'clock UK time. Bled out throughout the day on Monday because tariffs. We don't need to go around this rigmarole again. Obviously, it's not great news for the efficiency of global markets if you're putting premiums on trade, and maybe there'll be countermeasures, counter tariffs. This sort of thing isn't very good for business. So stock markets, equities responded by trading lower until yesterday. Yep. Obviously, this week is the World Economic Forum. All the wise heads, the wealthy, the central bankers, politicians are all schmoozing on the hills of Switzerland, maybe getting some après-ski in. If you listen to Trump's speech this morning, I think he might have been hitting it quite hard on the après-ski last night. He was much more enthusiastic yesterday than he was today. But they were in Davos in Switzerland, and Trump had his announcement yesterday, his little press conference. Well, I say little, it stretched and it rambled, much in the way that I'm doing.
Yeah.
But in there, he'd cooled off on his tariff threats. Well, in fact, at that stage he hadn't. He cooled off on the military threat to Denmark. So obviously he wants to take Greenland. He'd offered money to Greenland.
Yep.
Greenlanders, $100,000 each for this, but obviously it's not their decision. It's Denmark's land. And he's then U-turned on the fact that he's going to, if they don't accept it, use force. That was in the initial speech. And if we zoom in onto Wednesday's session, you can see when he started talking at 1:30 that the market was a little bit unsure, and then the comments came through, and then we had a bit more clarity on, okay, this is cooling a little bit from where it was last week and into early morning on Monday. Markets rallied. This is the open here at 2:30. We weren't too sure to begin with, but then the buying power really overtook the market, and we had a lovely big expansion right beyond the call wall. In fact, it was a big expansion day. Got right into the call wall, in fact, at the highs on the NASDAQ on this particular move. before it was like, yeah, it's cooled, but has it really changed, right? He still wants a deal, he still wants a negotiation. Well, cooling for some time until the heat. This was the tariff withdrawal. He's no longer now going to give the UK and 7 of our European neighbours 10% increases on the tariffs that we already have. And markets like this. This is a taco trade, hence
surprise, hey? Surprise. I mean, you know.
It's normally this amount of days. It's normally 3 days. Right? I should probably backtest this a little bit more thoroughly than that, but 2, 3, 4 days seems to be the amount of time that he has the bee in his bonnet before he then decides to kind of pull back. If you remember, we can have a look back on
might be a great swing trading strategy.
Yeah, look at April, right? We had this was announced on the evening of April 2nd, and granted, this first move back was the rumor, so it was actually on April 9th, so a little bit longer on this occasion. But bearing in mind, yeah, it was the Wednesday night and it was the Wednesday morning, so less than a week before the big U-turn that he did.
Yeah.
So this is kind of ballpark. I wonder if, him and Melania had a falling out.
Well, I mean, he seems to do this, repeatedly. It does surprise me that the markets even react to anything he says anymore, to be fair. So
I mean, it's a great thing. As a trader, it is
of
fantastic.
Course, yeah.
As long as you don't get over your skis with too much size, and because the volatility can be really quite aggressive at these times, you maybe want to size down, stops wider, because the targets are clearly there, as we've seen even in today's session, but certainly yesterday. I mean, this was over 100 points from lows to highs on the S&P. NASDAQ, way more than that. So this is the story of the week. Is it concluded? Well, there is a conclusion to the tariff threat. It seems unlikely that he'd then come and re-engage on those tariffs so soon. So that should give us a little bit of a window of opportunity. But yeah, where are we? We're kind of not back where we were, at least on the stock market yet. So this gap might be, for the bulls out there, looking around that 69.80 level on the futures, a little bit lower on the SPX. Where are we? 30 points higher than here. Might be in sight if you still feel like this bull run continues.
So do you think today we will probably likely be seeing a day of consolidation?
Yeah, I think it's going to be less fun than yesterday. Trump's had his chat at the World Economic Forum already today, so we're not going to hear more from him, I don't think, although you never know with him. The levels for me for the S&P, and if we bring up the SPX or the official XPX from the CBA, the numbers, we're kind of trading north of here now, but 6,900 is the kind of second largest exposure. The actual largest option exposure is all the way down at 68.50. So to me, I think the upside is going to be a little bit capped. Because obviously that gap higher is in everyone's mind, I'm sure, to see if it gets done. The markets haven't liked this week and what it's kind of meant for global risk, because I know Mark Carney's the former Bank of England chair and now the Premier over in Canada, he's saying this is just a change of global norms, right? The breakdown of America leading Europe and the Western world forward. It now feels like we're on slightly different paths.
Yeah. So when you're looking at options, calls and stuff like that, are you looking at 0 DT ones as well, or is it mainly just the longer contracts?
I've always used the 0 DT.
Okay.
I'm now using the longer contracts too for kind of critical levels. I know we were chatting earlier today, weren't we, about whether you're in positive gamma, negative gamma on the longer term, that this has different implications for markets. I think we're squeezing ourselves back into positive gamma territory on the S&P, which might mean it's capped. We're not there on the NASDAQ, which might mean that we get bigger expansions in the NASDAQ today. So if you're a NASDAQ trader, or an index trader, and you will like big moves, maybe you'll see them a little bit bigger in the NASDAQ than the S&P.
Yeah, because I was looking at some research about option puts and calls and call walls and stuff, and there was a lot of data provided quite far back where there wasn't a lot of 0 DTE sort of like things going.
The product I think was launched in 2021.
Yeah.
So it's a new market.
So it's completely changed since then, because it normally meant that you could guess the amount of volatility on where the options call walls and stuff were.
Right. That's what it's for.
But now it's kind of spread out a bit, because they're saying half the market now is 0 DTE.
Yeah, more than half of the option volume is 0 DTE.
Yeah. So.
And apparently 60 I mean, I've not done this research, but I've read that 63% of the moves in the market are just option hedges.
Yeah, I mean, options are, they are the hugest, they're even bigger. Well, options used to be sort of like an insurance against movements in the markets, but now they do seem to control the markets quite a lot, so...
And it's not just retail either. Like I know it's been subscribed a lot by retail traders, especially in the US, because they're not permitted to trade CFDs everywhere.
Of course.
So they either traded futures or nothing.
Yeah.
Right? Or long dated options. There were weekly options. There wasn't tons of volume in that. The monthly options are the ones why we care about the option expiries, because this is where the hedging often happens for these big funds. But they still play in the 0 DTE. But now we've got a lot of retail in the 0 DTE. And what's interesting with the gammas is it's kind of the accumulation or the aggregate of where everyone has placed their positions. But more importantly than that, the prices at which the option dealers get the most effed. Yeah. And this is where markets tend to move to, because as it goes there, they need to hedge more and more, and it becomes a bit of a self-fulfilling prophecy.
Yeah, I mean, look, I'm doing research into options now, and it is not the easiest thing to understand. But one thing I do understand is that once I truly understand it, it is very useful for day trading.
Yeah, especially the S&P 500.
Yeah, exactly.
I use it for the NASDAQ as well. It does work well in the NASDAQ too, but the NASDAQ is a little bit more jumpy. The S&P, it's more. There's a lot more volume in the SPX version of this than there is in the NDX. So if you are an S&P trader and you're not using option data, maybe have a look at it. It's pretty inexpensive to get hold of. I mean, there are some free kind of scratching the surface versions on Twitter. I know Gamma Edge do one every day if you want to follow them. I think it's Gamma Edges is their Twitter handle. They post out where the call wall and the put wall are, at least. Yeah. Nothing else. Or there are other bits, but not as in depth as you would get if you were paying for a service. I think they're about $80 a month. Message me if you want to get a link.
Okay. Well, you're got an affiliate scheme, have you?
Well, I don't think I get any money for it. So I think the one I use is Spot Gamma. The guy's really good, Brent Kachuba.
Okay.
He's been a long-term options trader, and he's the one having followed. I only subscribe to it to get the data, but he's really on it with his calls each day.
So really that's a website, is it, or?
Yeah, Spot Gamma. Is who I use. Yeah.
All right. Yeah, and it's got like nice charts and stuff there, and
lovely
it shows
stuff.
You kind of heat maps of hot and cool areas and stuff, as they call them.
And even the cheaper of the 3 subscription levels gives you all the 0 DTE stuff if that's all you're interested in. If you want to get more into option and finding that information out for like an individual stock traders, you might want to have that information where the market's going to maybe pause or run to. It's kind of, you can use these for targets as well as reversals. So if you are interested in that, then I think it's a bit more for individual stocks, but for the SPX, NDX, it's pretty cheap.
So somebody's saying that you can get bar chart for free, but it's a 15-minute delay. So it's maybe another option for people out there.
Yeah, I mean, does it do gammas? I know they do like the open interest on a lot of these websites for free, but whether they calculate the gamma exposure, which is the risk to the dealers, this is the difference, because it's the risk points for the dealers that are truly what take the price to that level. If you imagine they're going to have to give people pay loads of calls out, that in fact puts out today, I guess it would be, if we got all the way down to that 68.50. Well, the further it goes towards it, the more likely it is to get there, and therefore the more selling they have to do to hedge it, and it then becomes like a self-fulfilling prophecy that way. So it's not just the open interest, it's more around how they are hedged themselves as an aggregate, and that's what takes it there. So it's gamma if you want, not open.
And obviously we teach that here at Educate to Trade as well, don't we?
Right?
Yeah. So reach out if you want to sort of like be educated in all this stuff. Bit of a plug there.
There we go. We've not got too much time because I want to be there for the Gold Open today. Although there's news at 1:30, I don't think there'll be much, but always worth a watch, especially at the moment. Anything else on your mind while we've got some time?
Not really. I mean, obviously gold is soaring once again. Any predictions on what's happening with that?
Well, gold struggled initially on this lacking of tariffs news, right? Obviously, it doesn't respond well to that sort of thing. But there is decent absorption happening here, right? These sell-offs are being bought into. Even this move higher, I think, was like more and more and more selling. So this shows that there's institutions just acquiring more. Doesn't look like this rally's done yet, in my opinion. I'm sure there'll be plenty more bumps in the road plenty more Trump tantrums for us to benefit from if we want to get long gold.
Well, yeah, I'm sure once this Greenland thing is over, he will choose
Iceland next.
another country.
Faroes, and then it's us.
Maybe find another planet to invade soon.
Yeah, him and Musk are teaming up for that one by the looks of it.
Yeah. Okay, cool. Well, I think that's covered it all. It's been a bit of a short week, really. The only thing to talk about was the whole Greenland situation and Trump and his withdrawal again. So
the taco trade is real.
The taco trade is real. Yeah, build a taco strategy around that, can't you?
Yeah. For those who don't know, taco is Trump always chickens out. You'll hear this everywhere. If you wonder what a taco is, I enjoy eating mine now, thinking about that.
Okay, Chris. Well, thank you very much for your time today, and until next week. That's it from us, and remember to trade safe, and thank you very much, and goodbye.
See you next time.